Welcome to the program. Today we'll talk about if the market is down, who's to blame. We'll look at the RBA minutes and we'll discuss the probability of a rate rise on Cup Day. I'm Marty Switzer.
I'm Peter Switzer.
And we're mad about money. Morning, Pete.
Hey, mate.
Big story this morning. APRA's just announced that it's going to require the banks to increase the amount of capital they hold from about 9% to 10.5%. What sort of impact is this going to have on bank stocks and the market today?
Okay, well,
and more generally?
You think that the share price of banks will go down today, but the bank share prices have been falling in anticipation of what APRA might say. I don't think it's more aggressive than what the market expected. What's going to be critical is how do the bank bosses respond to it? And they're going to have to say something to the stock market before it opens at 10 o'clock. So if people are watching this later and the market's down, maybe what the bank bosses have said has spooked the market a bit. If they don't, it's because the bank bosses have said, okay, we can manage this increase in capital that APRA's making us hold, and it's not going to hurt us. It's not going to cut the dividend, for example. It's not going to mean we have to issue new capital. There might be ways around that they can achieve it by 2020.
But it may mean they might deploy less capital, which as a result would affect the growth of the business, which could hurt earnings, which could hurt share prices.
APRA doesn't want banks to lend too much to make their balance sheet more risky. They want to make the balance sheet better. But the interesting thing is this, it could be one step back for banks for one step forward, because what we're seeing is these banks will become even safer. Australian banks are internationally very safe anyway, but this even makes them safer. So it might bring a lot of foreign investors in because they look like a better investment vehicle. There could be one step back for a couple of days or something if they don't like the APRA statement, but then banks could be the great recipients of the improving Aussie economy as well. So we'll have to wait to see.
Okay, RBA minutes out yesterday, fairly positive.
Yeah.
Talk of interest rates increasing. Let's deal with that. The talk of interest rate increases later, and whether or not we think that's accurate.
But they're all related.
The RBA minutes. What were the key points you took out of that?
Well, the key points were on the first hand, they're reinforcing their view that the Aussie economy is doing better than what the doomsday merchants were saying, which makes me really happy because, as
which they've been saying for a while too.
I keep chasing and looking at the data, and it's interesting. A guy called Greg Gibbs, who's a foreign exchange operator, came out in Fairfax Press today and saying all the people who are negative, they're not looking at the data. He thinks the Aussie dollar could go to 85 US cents this year sometime. And he said, on the strength of the Aussie economy. So the Reserve Bank thinks that we're doing well. They're up there with a 3% economic growth call, so they're happy with that. But also, it has led some analysts to say that the point of neutrality for monetary policy will be the cash rate at 3.5%. We're now at 1.5%, so there's a 2% rise before we get to neutrality. But the big question is, how long will that take? We don't know.
And interest rates have been currency has been a concern for the RBA. So do you think jawboning might start again?
Probably, possibly. Look, the thing is this. The one thing about a rising Aussie dollar is that it means that the Reserve Bank doesn't have to actually raise interest rates quickly, because every time the dollar goes up, it's like an interest rate rise.
Yep.
So I think the Reserve Bank is on hold for quite some time. But Marty, there's been some speculations that there could be a rate rise on Cup Day.
Yeah. Any chance of that?
I wouldn't even put your money on that, Marty. Fair dinkum. I think the Deutsche Bank chief economist, he's come out and he thinks it's a good chance. I don't think so at all, primarily because of the Aussie dollar being so high. The Reserve Bank doesn't need to do it. They don't want to spoil an economy that's starting to look good. Why would they raise interest rates too early? And also, we know even the Americans are slowing down their expected interest rate rise. They think there'll be another rate rise in December. I just can't see it. And like George Babouras, our colleague, he thinks there won't be a rate rise until 2019. I think George is probably a little bit too hard on that, but I do think 2018 we'll see a rate rise.
Thanks, Pete.
My pleasure, mate.
That's all we've got time for. I'm Marty Switzer.
I'm Peter Switzer,
and we're mad about money.